Is Bitcoin hurting gold? I'll be the first to admit that I don't get Bitcoin. It is sometimes referred to as digital gold, but is that true? This is Coins Roc. Stay tuned as I explain. Pretty much everyone has an understanding of gold. Its history as a store of wealth dates back roughly 5,000 years. Up until 1933, the US dollar was backed by gold, and it was used as an everyday medium of exchange. Back then, gold was valued at $20.67 an ounce. With gold today approaching $2,100 an ounce, the average annual appreciation has been 5.3%, better, better than the long term rate of inflation. In addition to being a store of wealth held by the key central banks around the world, it is also used for jewelry and numerous industrial uses, and many countries still produce gold coins for collectors and investors. The supply of gold is relatively scarce, and new mining production only adds a small amount of gold to existing supplies every year. Bitcoin is a little more complicated to explain and understand. First, the terms Bitcoin and cryptocurrency are often used interchangeably, but this is not correct. Bitcoin is the largest and most well known cryptocurrency, but there are actually over 20,000 different cryptocurrencies. Most are very small, and many will fail. Compared to gold, Bitcoin is the new kid on the block, having been first created in 2009. Like gold, Bitcoin's appeal is in its scarcity. A total of 21 million Bitcoins is a maximum number that can be mined or created. So far, approximately 19.5 million Bitcoins have been mined, with only 1.5 million to go. I wish I could simply explain blockchain, but I can't. As the numbers get smaller, creating new Bitcoins gets harder. It is also estimated that around 20% of Bitcoins have been lost from people forgetting the password to their digital wallet or dying without someone having their password. Bitcoin has been in the news lately as the price has topped $60,000, but less reported is the fact that in January 2021, the price was also over $60,000 before dropping to $16,500 in October 2022, a decrease of almost 75%. To say Bitcoin is volatile would be an understatement. Someone who bought Bitcoin 3 years ago is roughly even. Someone who bought it a year and a half ago has seen a substantial gain. Both Bitcoin and gold have gained respectability as alternative asset classes to the traditional asset classes of just stocks and bonds. Perhaps the biggest difference between gold and Bitcoin is the demographics of the buyers. One recent study showed that over 90% of Bitcoin buyers were between ages of 18 and 40, while a significant majority of gold investors are between the ages of 40 and 65. It could be that older investors don't understand Bitcoin and are not comfortable with such a volatile asset. There is no denying that Bitcoin has had an impressive long term rate of return. 10 years ago, gold was $1,300 an ounce, and today, as it approaches $2,100, that's an increase of over 60%. Bitcoin 10 years ago was around $300, and as it passed $60,000, the increase is up over 200 times. The Bitcoin returns have made the gold return seem downright meager. Of course, the reality is that very few people bought it 10 years ago and kept their investments through all the ups and downs. I have seen projections for the future price of Bitcoin everywhere from $1 million at the high end to zero at the low end. No one knows for sure. The only certainty is that extreme volatility will be the norm. So back to the question, is Bitcoin hurting gold? The answer is probably. Money that goes into Bitcoin is money that is not going into other investments, including gold. Bitcoin investors seem to be attracted to alternative type investments rather than traditional investments like stocks and bonds, but it's not that simple. As Bitcoin investors cash in on some of their large gains, they may look to other alternative investments to reinvest some of their proceeds, and gold is always near the top of the alternative investment list. No studies have been done, but it makes sense to think that some of the Bitcoin gains have gone into gold, increasing the demand and the price of gold. If cryptocurrencies did not exist, it's safe to assume that some of the money would have instead been invested in gold. But cryptocurrencies do exist, and it's equally safe to assume that less money went into gold investing and instead went into what has been referred to as digital gold. Bitcoin will always have its fans. As for the future, if you can handle the volatility, you might want a small exposure to Bitcoin, but it's not an either or choice when it comes to gold, and you might also want an exposure to gold as part of a diversified portfolio. Remember, this is not investment advice, just my opinion. I hope you enjoyed this video. If so, please subscribe, like, and comment. Thanks for watching.